What's up, everyone? It's Karthik with MoneyVest, and markets capping in a very strong week with the Nasdaq pushing up over 1.5% today. We had the S&P 500 a little bit shy of 6,000, up close to 1% on the day ahead of Trump's inauguration this weekend on the 20th. So we're going to find out exactly how the markets respond next week once we are under a brand new administration in the White House. And TikTok is also set to take a ban on the 19th, so it's going to go dark on app stores across the board in the US, where people are not going to be able to download the application anymore. And I think it might not work for existing applications. I think that is what is set to happen on the 19th. So S&P 500 now up in 2025 also after a broadening rally ended ahead of Trump's inauguration. And what's also encouraging and really interesting data is that the equal weighted S&P 500, which is ticker symbol RSP, is actually greener. It's actually up more than the sector weighted or the stock weighted S&P 500. So year to date, this is up over 2%, thanks to a broadening rally in other parts of the market. Whereas S&P 500, if you come take a look, year to date, it is up over 1.5%. So we're actually seeing more stocks kind of broaden out a little bit into other sectors. That's why the markets are seeing a very strong recovery, especially on the equal weighted side. However, we're also coming up to that resistance as we talked about within the context of a downtrend. We'll come back to that here in just a minute, but the portfolio was up a little bit over $11,500. I made a lot of moves today. I did a lot of buying and a lot of selling of calls at the same time. I did also pick up BITX yesterday, not today, but yesterday I picked it up 90 shares to get to my 100 share position at 57.50. To average down. You'll notice I said, picked up BITX 90 shares, 57.50. Cost basis is now at $58.29. That could not have come in at a better time because BITX, since it's leveraged and Bitcoin also rallied quite a bit, was up over 8.6%. So getting back up to 63, almost $64 per share. At one point, it was up to over $65 per share. So very strategic pickup here. Very risky play, as I mentioned, because it's 2x leveraged on Bitcoin. So please be careful. And then, of course, sold the call against those shares at $58.50. However, I did collect premiums of well over $324. So you basically take this $324, add it back into the sale strike price, and that is going to be your actual sale price. In this case, was $61.75. So I'm actually participating on this rally all the way till $61.75. This does expire next Friday, but I will be considering to rolling it out to $62 or $63 or maybe even $60 in terms of that strike price, from $58.50 to $60. And of course, when you add that premium, it's going to be closer to where the market price is. And of course, this is at the tip of the iceberg. I made a lot of trades on NVIDIA, on SoFi, on Tesla. So again, if you want to get access to all the trade alerts, find out exactly what I'm trading on a regular basis, on a weekly basis, link's going to be down below. There's a few more spots left for that 16% annual discount. And you get access to all the trade alerts, all the options portfolio updates, long-term portfolio updates, as well as all the members-only videos, and of course, access to the MoneyVest website as well. So pretty much going to be down below. Link is there, and feel free to join. We really do want to genuinely help you in your financial and investment journey. So when it comes to the inflows for the market, over 540 billion, so just about $500 billion worth of inflows in the S&P 500. Magnificent Seven gaining over $305 billion in inflows here, and of course some of the biggest winners for the day: NVIDIA over 100 billion, Tesla 44 billion, Amazon 56 billion, Google, Broadcom, Microsoft, Apple, everything pushing higher very nicely on the back of some very strong earnings. Speaking of, if you come over to the earnings calendar and go over to next week, we've got a pretty packed earnings week coming up here after the inauguration of Donald Trump over the weekend. So we've got, of course, Charles Schwab, we got Netflix, we got 3M, we got Interactive Brokers, we got Procter & Gamble, Lamb Research, Johnson & Johnson, we got Texas Instruments, Verizon, American Express, Intuitive Surgical, Union Pacific, Abbott Laboratories, Nextera Energies, and the list goes on and on and on. This is literally getting started now. Earnings season is going to be in full swing. And one of the best things you can also do in our platform is you can come over to any stock, in this case Netflix, fundamental analysis under earnings volatility, and it's going to show you the probability of the company beating or missing expectations for specific numbers, EPS or revenue. It looks like Netflix has not been able to beat revenue ever. There's a 0% probability that Netflix is going to beat revenue. There you go. And we've got 60% probability that it's going to beat earnings. And you've also got a nice little chart that shows you the price movement after the earnings have come out. So that is also available, like I said, on our MoneyVest platform. So coming over to the snapshot, this was the greenery in the market. Semiconductors up 3.1, technology pushing up 84 basis points. If you remove for this, you can see just a lot of momentum coming back into the market here. And coming down to the snapshot, the S&P 500 is now well within 2% of its all-time highs, with the Nasdaq now just a little bit over 3% from its all-time highs. And the Dow Jones, Russell 2000, by the way, is still in a pullback, a little bit under 8% from its all-time highs. And the Dow Jones is 3.5% from its all-time highs, with a lot of stocks, in fact, are going to... a lot of stocks are in a dip or a slash pullback. Very few are in a correction. Oracle's in a correction. Tesla's still in a correction. Nvidia is just in a correction, barely. It's a little bit over 10% from its all-time highs. And Apple, of course, after the brutal sell-off from a couple days ago, it is now also in a correction down over 11.5%. AMD is still in a bear market. Qualcomm's in a bear market. And Adobe also in a bear market as well. The MoneyVest index is now sitting at 3.37, so lots of momentum back up, and we are back in that range for the MoneyVest index to get back up to neutral zone, back over to 3.3. So coming over to the markets, volatility here continues to slide lower. It's now back under 16, a little bit over 3% down on the day. So keep a close eye at 15. So that's going to be the level to really be watching, all the way up to 18s to 20s. Crude oil prices also finding some resistance at $81 a barrel, starting to roll right back down, with the support level sitting roughly at 77, down to as low as $73 a barrel. Again, very overbought, and this entire move in the month of January has been very strong. It's still up over 7.5%, almost 8% in the month of January, which obviously is going to be impacting inflation in our January report, which is going to come out in the month of February. Coming over to the 10-year treasuries, the 10-year yields, so to speak. So if you come over to this chart, and if you take a look, the 10-year treasuries this week have been down a little bit, close to 3%. So yields are back down to 4.6. Obviously putting a lot of upwards momentum in equities because of that inverse correlation. As yields come down, the present value of all future cash flow starts to increase, thereby making the valuations slightly less, and thereby having that momentum to increase once again. So keep a close eye on the 10-year treasuries, of course, something we've been watching very closely, and the level to really be focusing on now is going to be 4.49%. Another very important threshold. If it continues to break down, that's good news for equities. If it continues to move higher, it gets back up to 4.8 or 5 or higher, then that's obviously going to be a lot of problematic, a lot of really challenging environment for equities to rally into. So we talked about the trouble trifecta. We got the 10-year treasuries, we got the crude oil prices, and then finally coming over to the dollar index, which is still moving in this uptrend or this rising wedge. And it pushed up this past day, so getting back up to 109.4, 41 basis points higher. So if it continues to rally, the next target is going to be the ideal 110 level to watch, 110.15. So that's going to be the level to keep in mind for the dollar index. So yields are coming down, oil prices are coming down, volatility is coming down, dollar index is still pretty elevated and still moving higher. Now coming over to the S&P 500 over here, we are now coming up to its resistance. So yes, you can make a case that, okay, we're starting to see a little bit of a breakout from this downtrending channel of lower highs and lower lows. We kind of creeped above that level. However, we are still, I would say, within range of our downtrending of lower highs and lower lows. And so next week, I think, is going to be a very important week. Whether the S&P 500 after the inauguration has the potential to break out, to get back up to new all-time highs at 6,100, or if you're going to find some resistance right here, and we're going to start our process of slow and steady sell-off once again. We are in a downtrend. I want to be very objective and clear that this is still within the context of a lower high and lower low, and this is usually how these bigger shifts in these direction actually start. You will never find the markets go up or down in a straight line. Like, this is never going to be the market. This is not the market going up, and this is also not the market going down, right? if you've been trading and investing long enough, you'll know that this is usually how the markets go up, which is up and down, up and down. But the overall trend is to the upside because we're making higher highs, right, like this, and we're also making higher lows. So it's kind of like a staircase move to the upside. However, on the downside, it's the exact same thing. We just don't go down in a straight line, right? Instead, what we do is we go down, we go up a little bit, we go down more, we go up a little bit, we go down more, we go up a little bit, we go down more. So again, this is the lower highs and lower lows that we continue to form for the market. For any stock, for any index, that's usually the overall pattern. And so right now, we're very much in a lower high, lower low, coming up to that resistance at 6,000. So that's going to be the one to keep in mind. We closed below 6,000 for the day. So very important level to watch going into next week is going to be right there. Talking about the NASDAQ, and NASDAQ also within the context of this downtrend, you can see lower highs and lower lows, but a very strong move to the upside, 1.5%. So it does still have a little bit more upside, just over 1%, getting up to this lower high over here. And that's going to be sitting roughly at 19,870, 19,900 in the context of this downtrend for the NASDAQ. Support level, of course, is going to stay put at 19.3 down to 19.2 for the NASDAQ. Coming over to Apple, and Apple continues to see a red candle on a green day, so getting rejected here on this resistance at 237, 240 as we discussed. Big red candle coming in down about 4%, and the next support really is going to be down at 219, 220 for Apple. Very, very oversold. It's actually looking to very attractive at these levels, and so the lower it gets down to 220 is the better the risk reward ratio is going to be, and I will be very interested in trading this stock moving forward. Amazon, on the other hand, continues to trade also in a little bit of a downtrend, so coming up to its lower high. So this right here is the lower high that we talked about in our previous videos. Still within the context of this downtrend, support level is going to stay put at $216, $217 for Amazon. Tesla is still struggling, I would say, at 428. It was not able to break and close above 430. So if you take a look at this resistance right here, we did cross to as much as 439, 440. So we were trading at a much higher price point, but then sellers really stepped in, and this right here is the longer wick. And this is how people get trapped. This is how investors and traders get trapped, because they feel like, oh, there's a breakout incoming. Tesla's already at 435. I need to put on my longs. And then next thing you know, sellers step in, and this is the longer wick, and you get trapped in this wick. And we closed below 430. It is really important for us to close. Closing candles is how you trade. You allow for the price to confirm a specific trend. You allow for the price to close at that level, right? Whatever candles you're looking at, doesn't matter if it's a daily, weekly, or 5-minute, 1-minute candles. You allow for the candles to close at certain levels in order to have that confirmation. You can't jump in mid-candle and then expect for it to continue, because things like this happen where you have the sellers stepping in with a long wick and you are back below that resistance of 430. So next week, after the Trump's inauguration, if there's any momentum left over, and if we break above 428, 430 again, and we close above this level, then I can successfully put this down as a support. And then, of course, the next target is going to be at 465. So we've got that momentum going for us at 465 with the support level now sitting in the 430s. But until then, we are still getting rejected for Tesla. Coming over to NVIDIA, place some big trades on NVIDIA here. So, it's now trading back above that support level in the 133, 136 level. So this right here is going to be that support. A lot of consolidation sideways in that range for NVIDIA. Valuation-wise, NVIDIA, in my opinion, is one of the better priced stocks compared to a lot of Magnificent 7 and across the board for our fan favorites as well. So I actually don't mind picking up NVIDIA, even at these levels, considering the valuation. But of course, the lower the better, right? I want cheaper shares. I want discounted shares. And so low 100s is where I want to keep my cost basis for NVIDIA. And right now, it's still in the low 100s, even after me picking up shares on the day today. So support level is going to stay put right here, 133, 136. Resistance all the way up to 144 for NVIDIA. Advanced Micro Devices is still within the context of this downtrend, so lower highs and lower lows. A nice little rally today, 2.5%. Support level is going to stay put here in the 110s, 112s for AMD. And the next target and resistance all the way up to $143 for Advanced Micro Devices as well. Coming over to PayPal and Visa, and PayPal here on the day starting to break above this resistance quite a bit. So big resistance coming up for PayPal over here. So we're starting to see a little bit of that momentum. and support level $84-$85 on the back of very, very strong bank earnings. And if you continue to see this break above this level, next target is finally going to be $100 to $104. We'll be seeing PayPal in the triple digit mark, first time since 2022. So it's going to be almost 3 years since PayPal has traded back up to $100. But the first thing is we need to break out above this resistance. This is exactly where we were not too long ago, back in December. We got rejected there, sold right back down. Right now we're starting to make a retest here at this level. Talking about Visa, and Visa also pushing up over 75 basis points, coming up to its resistance at $321, $322. So that right there is going to be that level to watch, and support level is going to stay put at roughly $306 per share. And of course, right now we're consolidating sideways quite a bit. And next target, like I said, is going to be staying put at $321, support level at $306. Coming over to, let's take a look, Palantir, SoFi. I want to do a separate analysis on those. I want to be doing more dedicated videos on both Palantir and SoFi, but just for a quick technical analysis, Palantir breaking out above $70 as we discussed. So this right here was the downtrending channel. Again, lower highs and lower lows, and right now we're starting to see this very nice move back up, and this is going to be that lower high, roughly in the $73 to $74 level for Palantir. We got the support now sitting roughly at $70 for Palantir. Coming over to SoFi, and SoFi also pushing higher very nicely. I did a video on this earlier, 1650. So that means a lot of contracts, a lot of call contracts expired in the money, and there's going to be a lot of shares, over 40 million shares that are going to be delivered by Monday, considering the lot of call options expired in the money here. And so next target or next resistance is going to be $17. And I also did pick up SoFi today, sold calls against them. And again, had that trade go out in the Discord. So I'm going to be doing a separate video going over everything in that video. Coming over to Meta Platforms, and Meta here selling off, perfectly validating that support at $603. And this right here was a support level that we validated or talked about in our previous videos. Low for the day, $603.67. Resistance and targets all the way back up to $638, still within the context of this uptrend of rising wedge. In other words, higher highs and higher lows. Coming over to Netflix here. Netflix also consolidating sideways. Support level is going to stay put at $809, $810. We're seeing a little bit of that rotation back down, but support level is still pegged at low 800s right now for Netflix. Google, on the other hand, consolidating sideways as we discussed. So a lot of back and forth here. Support level is going to stay put at 188, resistance up to 197. And then same thing is true for Microsoft, getting rejected at this resistance yet again. A red candle on a green day. We gap up and then we sold off intraday for Microsoft. And so we're still fighting a lot of resistance here in the 430s for Microsoft. And finally, if we come over to Enphase and Costco, Enphase continues to struggle at this resistance at $64, $65 per share. Next target's down to $58, $59 for Enphase. And then finally coming over to Costco. We got Costco here with a very nice move to the upside, 2.5% rally with a very nice support getting validated at $9.15. Next target and resistance sitting close to $960 for Costco. So hope you all enjoyed this video and a complete update on the markets. Did a lot of trades today. So again, if you want to get access to all of that, link's going to be down below with that 16% annual discount. It's only $24 a month. You get access to all the trade alerts, options portfolio updates, long-term portfolio updates, as well as all the members-only videos and the MoneyVest website access as well. So I'd love to have you on board. Happy investing. I'll see you all in the next video.